How's it going, fellow traders? It's Magic Trader here, and I'm going to go through all the markets that I trade, gold, oil, and all the major currency pairs, including the cross pairs. And making this video with the new microphone headset that I've got. I don't love it. It's actually kind of garbage, but I don't have anything else that I can use. I've ordered a new one, a really nice replica of what I've got, not a replica I should say, a replacement of what I've been using all this time that's been really good. But it's going to take about a week until Amazon ships it over to me. So I'm going to have to use this sucker until I get that replacement. So hope you can bear with me. Alright, so, and I made such a great video too. It was like a nice 30-minute video, chock full of like some really solid advice, things that I've learned over the years in trading, and all gone. Unless I feel inspired again in this video to rehash everything that I just finished saying. So let's take a look at gold, shall we? So we have that weekly 20 EMA that's holding price up, and it's been holding price up for many weeks now. We got a rush up in price after the FOMC release yesterday, and so we got a bullish engulf here on the daily. I still think that if that US dollar strength comes into the market, I'm still expecting this to eventually make a drop. It's just taking forever to do so. We could still just see price hold this area here and then a breakout and then a move to the upside. That's possible, but I still think the probability of a drop happening is higher. Okay, so I'm not taking any trades right now because there's really nothing to take on gold. So I'm just waiting and being patient. So oil, what do we see here? Weekly area of demand was holding price. Price pushed upwards. And now we're testing this area here, this supply zone here. So we got to move to the downside, and yeah, so now we're getting a move to the downside because some supply is being filled. We got a little bit of pressure onto the downside. Right now we also have institutional demand sitting here, so I think that, you know, there's probably like an 80% chance that price is going to make its way down. Okay, 80% chance, and about a 20% chance that this area just gets removed and we see a move to the upside. So if we do get that move to the downside, we're going to have to contend against this area here, this institutional area of demand, and we're also going to have to contend against this other area of demand, and we also got the trend line. So it's going to be tough to get through here, but the key to remember is there is a weekly area of supply in control. Alright, it's not the strongest area of supply because this area of supply was not used by the institutions to fill in short trades, but more used to close off long positions. Alright, so there is that very strong possibility that we see that break to the upside. Right now I'm not taking any positions. I'm just waiting patiently to see whether or not we're going to get that move down here, or if it's just going to break. If it does break, then I'll be looking to get in long. Okay, but I'm not going to go in long here because weekly supply is in control. Okay, so let's take a look at the US dollar. What do we have here? So US dollar, this chart is messy, but when I look at the real data, how it's really supposed to be laid out off of TradingView, this demand area is located about down here, and we're testing that area of demand, and I'm expecting a move to the upside like this. Alright, so a move to the upside which will most likely bring gold down, the pound, the euro, and all that stuff. In fact, if you take a look at this chart here, the monthly, there's a good possibility that we come and test this area here, that monthly sloping 20 EMA. Okay, and that monthly sloping 20 EMA is all the way up here. So there is that possibility that this happens. I'm not going to ignore the fact that this can very much happen. That's why I'm not going to be shorting blindly around these areas. Looking at the COT data and looking at price action is going to be extremely key as price plays out over the next probably few months. Okay. So so let me answer a question that I sometimes get. Okay, so here is price, and price is going to most likely head up there. And people ask me all the time, okay, so if you think price is going to head up there, why don't you just go long now? Okay, like if you know with some certainty that price is going to head up here, why wouldn't you go long here? And here's the answer to that. Because you see these trend lines here, right? This is like an obstacle. And before price gets all the way up here, it's going to have to hit that obstacle and make moves. It's going to consolidate, it's going to go up, it's going to go down, and that just will stir up emotions. Okay? It really will just stir up emotions. And when I get into a trade, I don't want my emotions to be stirred. I want to get into a trade and feel very comfortable sitting back and just watching. Okay? Like trading for me is like, a good analogy is like watching a movie. Okay? When you watch an action movie for the very first time and you don't know how the story ends, you watch it and you're watching the chase scene where the good guy is chasing after the bad guy, and the bad guy is like pulling out his gun and firing at the good guy, and you're like at the edge of your seat wondering if this guy's going to be shot or not, and you're worried and you're concerned what's going to happen, and your emotions get involved. And trading is like that when you're new and you're watching price action, and there's a bullish bar and there's a bearish bar, and then it's sideways consolidation, and you're in profit, then you're not in profit, and then you're in drawdown. It's the same thing. But when you have your emotions in check and you have a solid system of trading and you do the correct analysis on the charts and you open up high probability trades, when you have all those things in order, once you're in a trade, it's like watching that same action movie for the second time or the third time or the fourth time. Because now you get involved emotionally, but you're really not that emotionally involved because you already know how the movie ends. You already know 100% how the movie ends. Now in trading there is no 100%, okay? But in trading there are levels of, or I should say, there are degrees of certainty that you can have in a trade. So, for instance, if I went long here, targeting here, I'd say that there is about an 80% chance that that move is going to happen without any problems. 80% chance. Meanwhile, there's other charts that don't have trend lines crossing between my entry point and my target. Higher time frame trend lines that are sitting in the way there. And charts that don't have those higher time frame obstacles or any type of obstacle whatsoever, which allows the flow of price to just smoothly coast upwards to my target, on those charts there's like a 90 to 95% chance probability that price is going to get there. And so I'd rather open up a position where there's a 95% chance that the price is going to get to my target than an 80% chance. Okay? I want to get into a position where the flow of price is just going to coast slowly up to that target, as opposed to up, be in profits, down, not lose my profits, up, down, retest zones, come close to stop losses, back up again. You know, that is not what I want to be sitting through. That is how you get your emotions moving around. So the higher the quality trade you get into, the more emotionally stable you are, and the more emotionally in control you are. And then you can just sit back, put your hands behind your back, and it's like watching a movie that you've already seen many times, where you already know how it ends by 90 to 95% accuracy. Okay? So that's how I look at trading, and that's why every time I take a position, I want to only get into positions where there's a very high probability that that trade is going to work out, so that I can sit through FOMC, rate increases, news alerts, Donald Trump tweeting, no matter what. I can sit through it calmly and know that price is just going to continue playing out, and I have nothing to worry about in terms of my position. All right? So let's go to the Aussie. What do we have with the Aussie? Did that get triggered? Yes, it did. I posted on the previous video that the microphone wasn't working on, that this was a institutional trade signal that I was waiting for. Right here. H4 demand zones off of the daily demand zone here. This is the daily demand zone. And here's the 4-hour chart. Boom, institutional orders, price retracing to pick up the rest of the orders. Now I am not taking this trade, and here's the reason why. If the US dollar was in an area that I believed the price was going to start making a move to the downside, I would definitely 150% be in this trade right now off this area. Okay, and I'd be in profit right now. But, you know, price hasn't done its thing yet. But because the US dollar is it's expected for price to move even higher, and we are not hitting any area that I believe will be areas that will push price lower, there's a high probability that price still has to make a move to the downside. Ideally, this is the key area that we've been waiting for quite some time now to open up long positions, right? This is the ideal scenario, is to get price down to here. But the question is this area going to be taken out? Because this is a very, very important area too. So is price going to come down here? I think there's a higher probability that price is going to get down here than not. And so therefore I'm not willing to pull the trigger on this trade setup because of the other confluences. Now if it does end up working and we start to see a position being built from here, that's fine. I'm not going to be stressed out. I do have other things that I will be watching for, other institutional trade signals that I'll be watching for to indicate that they do actually want to take price up, and here's the turning point. So I'll be waiting for those to happen, and if they do happen, then I'll get into those trades, and I'll be getting into those trades with even more confidence. Okay, and then again I'll be able to sit back and just watch the story play out. So that's an institutional trade signal, but just because something is an institutional trade signal doesn't mean that the institutions won't take out that area to bring price even lower. Alright, so that's what I'm going to wait for. So I'm going to hold off on that one. Aussie CAD, I'm interested in getting in long here. I was in long here. I got out here. My original target was here. Actually, no. My target was here. I got out one portion of my position here, and I got out the other portion of the position here. Like, look how accurate that is. In here, absolutely no drawdown, and I'm getting out right at the top. Okay? And the reason why I'm able to do this is because of reading price correctly, understanding market dynamics, and understanding exactly where the key areas are to make note of, so that you know exactly where to get in and exactly where to get out. Okay, so next time somebody tells you you can't pick tops and bottoms, you remember what I'm doing here. Okay, don't mean to be tooting my own horn, but this is just an example, because it always upsets me whenever I hear professionals say you can't pick tops and bottoms. See, that's part of the that's part of the myth of the markets. You know, they only tell you that you can't pick tops and bottoms because they don't want you to try to find a way to pick tops and bottoms. All right? So read into Paul Tudor Jones and what he says about tops and bottoms. You'll know that what he says is that's where you make your money, is tops and bottoms. So, and I completely agree with him. And let me tell you, can you pick tops and bottoms? Absolutely 100% you can pick tops and bottoms. Is it easy to do it? No, it's not. But is it possible? Yes, it is. And here's an example. I showed it to you live. I told you when I was getting in, I got in, I showed you that I was in, and I told you when I was getting out, and I showed you when I got out. And look, and you can see exactly what's happened afterwards. So anyways, now I'm looking for a new entry in long because I do believe that we are going to see price head even higher. So, the next key area is in this vicinity. Only problem is this is very messy. I don't like looking at stuff like this because when I see price action like this, it tells me a story that is not good for opening up long positions. And soon I'll be posting videos and teaching you about, you know, why this is not good and all sorts of other stuff that's very useful in reading the market. But for now, I'm just waiting for the next institutional trade signal to come along so that I can get back in this one long, because like I said, I am waiting for the Aussie to start getting stronger, and I'm also expecting the CAD to get weaker, all right, over the longer term. So longer term strong Aussie, longer term weak CAD, which is going to make a really nice trade on this one to the upside at some point. So now I'm just waiting patiently to find when that point is going to be. All right. Aussie Yen, so it's expected for price to drop lower. Am I going to take shorts now? No. But I will accumulate a long position if and when price does get down here. So waiting for that to happen. Aussie Kiwi, waiting for price to get down here. Once that happens, I'll be looking to accumulate a long position to the upside. Strong Aussie, weaker Kiwi. All right. CAD Yen, weaker CAD. This way. Yen's going to be stronger. We'll take it to probably here, right down here, where I am interested in getting in long. Based on market dynamics, this is where the institutions want to get in long. So I'm waiting patiently until that happens. Euro USD, this one's a nice one. We got the profit taking theme we've been watching for many weeks now. Price rallied up into this area of daily supply, and now I'm expecting a move to the downside like this. It's taking long, but again, like I've explained, it always takes long. Okay, especially when you're hitting higher time frame areas of supply, it takes a while for the institutions to offload their positions. So during this time of consolidation, they use a lot of news and rate increases and all sorts of stuff to trigger the emotions of traders so that they can offload their positions. Once those positions have been offloaded, boom, the drop is going to come in, and it's going to come in hard. Very hard. So now there's a lot of range traders who are making money. They buy here, they sell here, they buy here, they sell here, they buy here, they sell here, until this sequence has played out, this phase of the market. Once that phase has been completed, boom, they better not be holding long positions, or else they're going to lose a lot of money. But that's what happens. Okay, so just got to be patient, wait for this to play out. I'm already situated short here, so I'm just waiting for this to break down, and then my targets will get hit, and I'll make a nice return to add to my returns on my accounts. So Euro, Aussie. So this one really worked out well. This is a trade signal that took a long, that I am testing right now, that I will eventually be adding to my repertoire. but I have to accumulate enough stats so that I can see under what specific conditions these type of trade setups work. But obviously you see that this one worked, right? Long position, stop loss here, entry here, bulletproof would have been here, daily target here, which would have been hit, and then higher targets on the way up. So right now I'm not looking to take any trades on this one because, you know, even though monthly trend is up, weekly trend is up, we have a weekly area of supply and control. This could be an area where price is going to rebound and head higher, but like I said, weekly supply is in control. It's not ideal for me. All right, the institutional trade signal was this one here, long, entry here, stop loss here, all upside, no drawdown, beautiful, pinpoint accuracy. This was a beautiful entry. But right now what I want is I want euro to fall. I want it to find support. I want the institutions to show me that they're accumulating a long position, and then I'll be interested in going long on euro pairs. Until that happens, going long euro pairs is just going to be a gamble. Euro CAD, we have a weekly area of supply in control. I do believe eventually we're going to get price to head higher, but like I said, weekly area of supply right now is in control and dropped, testing this weekly bullish engulf. So, you know, we could very much get a move to the upside here and then a bigger drop. I think probabilities of that happening are probably 80%. Okay, 80% chance. Am I going to take that trade? No, it's not ideal for me. But for day traders, if price gets up here, yeah, it'd be good to start shorting and take profits on the way down, for sure. But we'll wait and see how this one plays out. We'll be very curious to see how that one does. Euro pound, so we got a weaker euro than the pounds, which has been causing price to drop. But this chart's really nothing special, so I'm not even going to bother looking at it. Euro yen, so we're expecting a weaker euro. And the yen, we're expecting it to be a bit stronger until it starts to accumulate a position to the upside on the US dollar Japanese yen. So I think there's a good chance that we get this move to the downside as that happens. Okay, so bigger move to the downside. Am I opening up any positions? No, because there isn't any nice institutional trade signals to take a trade on here. So it's not high probability, therefore I'm not taking any trades. Euro Kiwi, this was an institutional trade signal. I marked it on my charts, new daily demand zones at the weekly demand zone. This was the weekly demand zone. This was the new area of demand off of that. Here was to go long and up, a new daily demand zone, and another entry long. I didn't take either one of those because, again, I'm waiting for the euro to find some support, institutions to start buying it, and then when I see that the institutions are interested in pushing the value of the euro back up, then I'll be interested in opening up a trade long on this pair. These are good signals for day traders to get in and out and not hold and not swing, because you know you can make money. But for longer term holds and swing trades, it doesn't work for me, so therefore I don't take any trades. Pound US dollar, so we see that this area of supply is now in control. Supply starting to be filled in. Double top right over here at a weekly area of supply. I'm expecting price to head down like this from these areas. So gotta be patient. I opened up another short position up here, and now it's just about being patient with that US dollar move that we are expecting to the upside. It will bring this one further down in the charts. Okay, so patience. Pound Aussie, so I mentioned on Twitter that all the pound pairs are hitting some type of higher time frame areas of supply, which is a good indication that the pound is going to get weaker. So here we have a weekly area that was previous demand, now supply. So expecting a move to the downside. We could even get a strong reaction from here, because this is an institutional demand zone right here. So if price does come down here, there's a very good chance that we see that move to the upside. Monthly's up, weekly's up, hitting resistance, dropping. Very, 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 very good chance that this works. When price does get down there, I'll evaluate what the pound's up to and what the Aussie's up to, and if everything's aligned, right, because we want a weak pound and then strong, and we want a strong Aussie and then weak. So we'll have to watch those charts and see what they're doing and see what their signals are, and then we'll have a better indication as to whether or not this trade has a high probability chance of working. Pound CAD, we have monthly area of supply and control, so the pressure is to the downside now. So I'm expecting a move down here. Day traders could start shorting. It'd be a good shorting opportunity right now, but I'm not taking any trades because there's no trade signals for me to take, so I have to wait patiently and see what happens. Pound yen, nothing here to look at. If price gets up here, it would probably be a good area to short, but it all depends on what's happening with the yen and the pound. Right now there's nothing to trade, so we'll move on. Pound Kiwi, here's an institutional trade signal to go long. I was looking for new daily demand zones off of this weekly imbalance, and this was it right here, and it's working perfectly. Right now there's nothing else. Gotta wait for price to play out, and then we'll find new opportunities. So we got on the US dollar Japanese yen, this area broken. I have an arrow here, it's been here for a while, expecting price to drop down here. This is where I'm going to start opening up long positions. It's going to take some time for price to make its move, but I do believe that this is what's going to happen, and then there's going to be a big breakout to the upside. So I have no problems holding a long position because I'm going to be getting paid positive swap on it, so I'll be just getting money just for having the position open, which is always a good thing. So US CAD, we fell short of hitting this trend line and this area of supply, and we see this reaction to the downside, which leads me to believe we're going to get a bigger move to the upside. With that US dollar strength that I'm expecting, I think that there's a very good chance that that's what's going to happen. So is there any trade signals? No. So I gotta wait patiently. Kiwi is a mess. It could break lower. Likely it's going to happen like that, but you know, there's no trade signals, so there's nothing to trade. US dollar, Swiss franc, I was saying that right here, 4-hour trades off of this weekly area of supply. Weekly has now been hit. If you look at the 4-hour chart, there is this area of supply. We could definitely get this move. And I would normally set up this trade, but because I'm expecting more US dollar strength, this could just easily break up even higher. So I'm holding off on taking that short. If it does work and it starts to head down, I know exactly what to wait for and look for me to get in on another position. So I'm not going to be missing out on this opportunity. It's just, if it does work, then that's telling me that this area does want to play out and the institutions are interested in shorting this pair, and then I'll just look for a secondary entry, and that's not going to be a big deal. Okay, so there you have it. Hopefully this microphone's not going to disturb you guys too much, because when I listened to samples of what it sounded like, I wasn't very happy with it. So what do we got? We have today Bank of England released interest rates. They're keeping them at 0.5%. And tomorrow, not much on news, nothing that is of interest to me, so it should be somewhat quiet rest of the week. And that's pretty much it. I hope this video was helpful for you in your trading, and I hope you have yourself a great weekend. Next time we chat will be with the CFTC video. Okay, so until then, have yourself a good week.